All right, good morning, everybody. Welcome to Stock Market Today, brought to you by Chaikin Analytics. Today is Wednesday, June 26, 2019. For aficionados of the show, you can tell this is not Dan Russo. He is still on his honeymoon in Italy. This is Nick Webb, subbing in for him. If you want to follow Dan Russo, see his Twitter handle there at @DanRusso_CMT. Certainly for the next week, you'll be seeing a lot of honeymoon pictures of, I believe he's making his way down to Rome right now. So that would be a fun set of pictures on Twitter. Hopefully the Colosseum or something like that. Let's talk about where we are today and what happened yesterday. Market did lose ground yesterday. Basically what happened was the Federal Reserve pushed back on the administration, and that pushback sort of took away the punch bowl, which was going to be a Fed rate cut. The market had started to price that into the equation, and then all of a sudden you got some pushback from both Jerome Powell as well as another Fed President Bullard. So by the time the day ended, the market had lost that ground. The biggest losers were technology sector, communications, and real estate. Technology and communications, not surprising, they had been sort of on fire when the Fed was sort of looking like they were going to cut. So that's getting sort of pulled back. The market is poised, however, for a big gain today on Steve Mnuchin's comments, which came in overnight, as well as Micron's after-hours beat. They beat earnings surprise. We'll talk about both of those a little later. But what else happened? Well, consumer confidence, which is a big indicator, was released yesterday, and it really fell pretty dramatically. Consumers make up 2/3 of GDP, sort of a little esoteric piece of information, but they're a very, very important part of the economy. And when they fall, or if they lose confidence, then it is really likely that we would have a recession. Again, they're 2/3 of the makeup of GDP. So it's never good when you sort of see consumer confidence fall that dramatically. And the reasons behind it, as you read the news articles, was that, people are beginning to feel the trade wars, and they're also feeling just a little less certain about where the economy is going. So that's certainly something to watch as we go forward. There's also a consumer sentiment survey that'll come out shortly. If that confirms this confidence, then both those things together would be pretty serious. Now, the U.S., so we talked about this in the last slide. The U.S. was trying to tamp down expectations around the Trump-Xi meeting at G20 over the weekend, this coming weekend. And it was pretty consistent from the administration. Everybody was towing the line. Hey, we're not really trying to solve a trade deal. We're not going to sign it. We're not going to make that much progress. It would be great if all we did was just get the trade talks back on track. And then Steve Mnuchin overnight declares that the trade deal is 90% done. Now, the big question is, did he get the message on messaging? I'm quite sure that Trump wanted to have a nice low bar of expectations so that he could jump over whatever those bar of expectations were at the meeting. And so my guess, and again, this is without any real knowledge, is that he's not pleased with the Mnuchin comments. On the other hand, the market is. You'll see that the market has quite a good opening today around these comments, because if we can get this trade deal done and the trade war behind us, it'll really sort of solve some of the friction that's going on in the economy right now. As we mentioned on the earlier slide, Fed's Powell pushed back on political influences, and he did it pretty hard and really said, that there's not a reason right now to cut interest rates, but they are watching. Other big news for the semiconductor and memory stocks, that have been sort of taking a beating during these trade wars. Micron came out with a big earnings beat. Not only did they beat earnings, but they also gave some pretty terrific forward guidance. So they look like they're turning the corner, and the market had been expecting real dire news. So I'm quite sure that they will be up, and they'll give the tech stocks a lift in the morning. The other thing going on is oil is sharply higher today on inventory data. There were some inventory pullback or drawdowns over the last week or so. And so that's something to watch, as energy prices have already been going up. And where will this take it? You can see over on the right-hand side, market really was having some trouble yesterday, particularly those tech stocks that we talked about, the NASDAQ down almost 1.75 points. So our stock of the day is Hill-Rom Holdings. Again, just general reminder that this is not a stock recommendation or even a stock pick. This is randomly pulled from our database of decently looking stocks. Hill-Rom Holdings is a medical products company. It's rated very bullish. It's got extremely strong earnings. The experts love it. They've got solid estimates going forward out into the future. The financials seem in place. So really solid looking stock overall. You can see if we go and read a chart the way we do at Chaikin Analytics, you can see very first thing up in the upper left-hand corner is that we're very bullish on the stock. That means fundamentally this is a decent stock. The fundamentals are in place. You can look at the bar at the bottom that looks at the track record or the history of those ratings, and you can see in general we've been bullish on this stock for quite some time. A little bit of neutral positive is my guess here. The stock has recently turned into a relative strength stock, so it's now beginning to outperform the market. So the market likes this stock as well. And then finally, if you look at money flow, which is institutional interest, you can see that institutions are beginning to notice this stock and smart money is beginning to pour in. So that's the three-legged stool you want to see. You want to see Chaikin bullish on it, the market bullish on it, and smart money, and all those three are in place. So good looking stock. What's been going on in the sectors? You can see that we had quite a change in the leaderboard yesterday. Healthcare has now taken the top, and technology has fallen quite a bit. They had been the leader a couple days ago. So definitely sector rotation as the market has gyrated between growth and fear. The sectors sort of move in lockstep to that, where, you know, if it's growth, well, then the technology sector will be leading. If it's fear, you'll see consumer staples and healthcare leading the charge. Our industry today, again, we rotate through these, is bank services. You can see that Chaikin's relatively bullish on this sector, but it has underperformed the S&P by almost 6.5%. So it's up, but not as strongly up as the S&P in general. Its power bar ratio, which again, this is not looking back historically, this is a forward-looking measure, says that 26 of the stocks are poised to outperform the market, whereas only 9 are what we call bearish or very bearish, which are poised not to outperform the market, to underperform the market. This is one of our stronger rated subsectors. It's moved up 5 into the 5th position over the last 21 subsectors. You can see here are some representative stocks in that industry group. If you take a look, I decided to pick Citigroup to drill down a little further on this. And you can see that, you know, Citigroup's a major bank. It's in relatively strong industry, as we just saw. But it hasn't been a, you know, it has a very bullish rating, so fundamentally in good shape. You can see here we've been very bullish on it. It's been outperforming the market, but seems like it's running into some headwinds. We'll talk about that in just a sec. And money flow has been flowing out. So if you think about a major bank like Citigroup, their primary line of business is loaning money, taking in deposits on the short term and paying short-term interest rates, and then loaning out on the long side and netting that difference. Well, the yield curve is really, really flat right now. So this is not a lucrative time to be in that business right now. So my guess is they're drawing back on doing some of that lending because there's just no profit in it. So they have to wait until the yield curve gets back into a more normal position, and then profits will be back and winning. So what happened yesterday in the market? Well, the big news was the Allergan merger or buyout from AbbVie, and you can see it the typical thing, you can see Allergan gained 25.36, whereas AbbVie was down 16. So, you know, there's no amount of Botox you can put on that wrinkle for AbbVie. They lost a lot of money. Allergan is obviously the maker of Botox, so we'll have a lot of smoothing out wrinkle jokes for the remainder of the episode. Next up, Micron is a typical reaction. Basically, you know, when there's a merger like this, all of a sudden everybody looks around for, well, what's the next stock that might be bought in this industry? And Micron certainly is a winner in that regard. Couple of other interesting things. You look over here to Lennar. We talked about they released earnings yesterday. It was not a tremendous success for them. Even though it was a beat, they ended up getting punished because their forward guidance was a little on the squishy side. It really wasn't terrible. I read the transcript, and it really wasn't terrible, but it was just a little squishy, and that was all it took. So that's why they got beaten down. Just this one down here, Hormel, if you remember, yesterday was you know, sort of a negative day in terms of trade war reaction, and they're very tied to China. And so when there's bad trade news, they get hammered. Look for them to move over to this column today, because I believe the trade news has really brightened. So that's going on. So we've already talked about Lennar. Let's talk about Micron. After hours beat it by 25 cents. So a real significant beat from what was expected. And not only that, but they also gave a lot of good information, forward guidance. It does look like they're turning the corner. Their earnings slowdown is beginning to turn. They're able to get better pricing. So that's one that really is going to drive the tech sector today, along with the China comments. And then finally, FedEx was the other big one that reported earnings. And even though they had a beat, again, their forward guidance, particularly around China, was really weak. And so the market didn't like that. They will actually be down pretty significantly when the market opens today. We've got a couple of consumer staples in General Mills reporting today. This is an information company, a Paychex company. Paychex, it's the name of the company. So it'll be interesting. And then Kraft Heinz after close. So consumer staples has actually been doing pretty well, and it'll be interesting to see how they report earnings and how the market reacts to them. So I thought, you know, you hear dividend achievers and you start going to sleep. I thought it'd be worth looking at how they have performed this year, and, you know, in our bonus slides. And they've done incredibly well. Money flows just started to come out of this a little bit, but the relative strength is strong. We rate this one as a very bullish ETF, which means we go into the various constituents and take a look at it. So this is a very strong ETF, and it's also a strong area that is often neglected because it's not really go-go. And to that point, let's just take a look at market breadth before we leave you today. And again, it's slipped a little bit, which I'm not exactly comfortable with, but it's still up in that 62%. So thanks a lot. See you tomorrow.